Now, we saw a slide in the past 2 days, but some key movers are beginning to shake the markets a little bit. There's Equity Bank today moving 6 million shares, closing at 23 shillings and 50 cents. What exactly is moving that count, and what's happening in the markets for us to see this flat trading in recent days?
I think on overall markets have rallied quite substantially, and in the absence of significant, any market moving information, I think we've seen trading within very limited levels. Equity Bank in particular has been of interest to both local and international investors with the new account they had with Safaricom. Although increasingly we are seeing investors quite cautious as to how much to actually pay for the stock, because it's not really cheap. But obviously there's quite significant interest on the stock given the performance of the company in the first quarter, and now we are approaching the second quarter, and obviously people are taking positions.
Still sticking with the banking sector, Cooperative Bank seems to be enjoying a little rise there, though minimal. Some analysts are saying that we might see a depression on that stock as profit-taking continues. Do you share the same opinion?
I think from last week we started to see a very different trend on Coop Bank. Foreign investors are starting to take positions. There's been very few foreign investors on that counter. Historically, we've seen foreigners sticking with Equity Bank and Kenya Commercial Bank for the indigenous banks, but now they're taking position on Coop Bank, and the free float on Coop Bank is very thin given the position of the cooperatives on the stock. So we are seeing the stock rising on very thin volumes, relatively thin volumes compared to other large cap counters. So obviously it depends on how far the foreign investors are willing to bid up the stock, but obviously it's approaching levels where we might see some profit taking. Let's
turn our attention to the energy sector, and this is a sector that's likely to make big waves towards the end of the year. One of the key players, of course, is Kenya Power and Lighting Company. There's a rights issue in the making. We've seen them also, diversifying their revenue streams. What is your analysis of KPLC and in particular their stock?
I like Kenya Power. I mean, you've mentioned about the diversification into telecommunications a little bit. And obviously the main overhang on the stock really has been the share restructuring, where they're going to convert the government preference shares into ordinary shares, and then from there on do a rights issue and then split their shares. But I think even after all those, the share restructuring in particular, I think the stock is still quite well positioned. It would be quite difficult for anyone to compete on KPLC's segment in terms of distribution of power, and already we are seeing the market has quite a lot to grow. So I like the stock quite a bit. I mean, there are many things running for the stock, but obviously it's sort of held off a little bit, but it's a good stock.
Still staying with the newsmakers, TPS Arena is on the news again about their bonus issue that has just been approved by the Capital Markets Authority. But the big news really when it comes to TPS Arena is of course their rights issue that is expected in a couple of weeks or the next few months. What are your expectations, keeping in mind that we've seen international tourism arrivals rise by about 10% in the first quarter of this year, something we haven't seen in the past 2 years? How's this going to impact TPS Arena?
I think it's obviously positive. There's going to be some dilution, but I think the company is taking this time to actually capitalize and acquire better, more facilities, and also improve on their current existing facilities. So it's obviously a good time to actually grow your business and also diversify into other regions. They're looking especially into Uganda. And obviously, if they're going to make acquisitions, there might be a cash component, even if, say, there is a share exchange. So obviously, I think capital raising at this time, given the state of the markets, is quite positive for the company.
On the flip side, CMC Holdings announced a 31% decline in profit before tax for the first half of this year. Investors began to exit the counter yesterday, leaving the share at about 12 shillings 95 cents. It traded flat today and closed the day at the same amount, that's 12 shillings and 95 cents. What's your analysis of the direction CMC is likely to take, given the fact that the motor vehicle industry is set to improve, at least in 2010, after the economy has begun to finally recover?
Yeah, I think CMC from last year they gave an indication that this year would be quite challenging, and we've seen that being reflected in the earnings. I think their biggest concern, especially, is the pricing for their vehicles. The yen has appreciated quite substantially, so they've had to start, sourcing for vehicles maybe using the euro, because euro has weakened compared to the Kenya shilling, so makes their vehicles much more affordable in the Kenyan market. And obviously, looking forward, they've borrowed quite substantially, heavily, and the finance costs have been hurting. So unless we see a substantial increase in volumes, volumes moved by the company, and I think that will probably only recover into 2011. So I think this year is still going to be challenging, and they've indicated that.